Hello, and welcome to 2014. 2013 sure flew by, didn't it? With this 2013 annual recap, we'll discuss some of the important events that took place and talk about what investors may see in the coming weeks. Also, please review the required disclosure statements at the end. 2013 was a banner year for stocks and marked the fifth year of the bull market. Despite a lot of volatility during the year, equities performed very well, giving the S&P 500 its best year since 1997. For the year, the S&P 500 rose 29.6%. The Dow gained 26.5%, and the Nasdaq grew 38.3%. The U.S. economy also ended 2013 on a high note. Gross domestic product, a measure of economic activity, grew an estimated 4.1% in the third quarter, the fastest pace in almost 2 years. Though we don't have data on fourth quarter GDP yet, some economists believe that we may see sustained GDP growth of 3% in 2014. The labor market also improved significantly in 2013, with unemployment dropping to a 5-year low of 7% in November. Payrolls increased solidly in October and November, and weekly unemployment claims fell in the final weeks of December. What's better is that recent hiring trends show that gains were spread across both low-wage and higher-wage sectors, meaning that more Americans were able to find well-paying jobs. Company earnings rose for the fourth straight year despite weak demand and challenging conditions. Total earnings for S&P 500 companies in 2013 are estimated to have increased 5.4%. painting a hopeful picture as we move into 2014. Investors were willing to pay outsized prices for those earning results, pushing price-earnings ratios, a measure of stock price to earnings, to an average of 15.4 by the end of the year. By that measure, stocks became more expensive in 2013, but PE ratios in the S&P 500 still remain below the 20-year average of 16.5. Political gridlock in Washington stoked market volatility in 2013. While budget showdowns have rattled markets in previous years, investors started to get wise to Washington's habit of brinkmanship. Despite dealing with the 16-day government shutdown, investors stayed calm and markets rose sharply in the period immediately following the budget deal. Some estimates put the cost of the shutdown at $2 billion in lost productivity, plus the cost of ripple effects across the economy. Fortunately, a bipartisan budget deal reached in December promises to remove a lot of the uncertainty that hung over markets in 2013 by alleviating a new round of cuts and stabilizing government funding through late 2015. Though politicians will still have to tackle raising the Treasury debt ceiling in early 2014, we can hope the bipartisan good feelings will help avoid another shutdown. The Federal Reserve was very active in 2013, and anticipation of a slowing and quantitative easing drove a lot of the volatility. The Fed bought $85 billion in bonds each month in 2013, a move that was designed to hold down long-term borrowing rates and encourage spending and investments. After months of anticipation, the Fed finally announced a reduction in the pace of their bond purchases at the December Federal Open Market Committee meeting. Markets rose after the announcement because investors viewed it as a vote of confidence about the economy's strength. Looking ahead, we're optimistic for a bright 2014. It's possible that stocks will slow their pace of growth, but we think that there's considerable upside potential if the U.S. economy continues to gain steam. While a pullback in the next few weeks is possible, as investors consolidate their positions, January has historically been a good month for markets. Although it's not possible to predict market trends with any accuracy, we're always on the lookout for new opportunities for our clients. Once again, this is Jason Kendall with SFS Wealth Management, signing off for the month of December 2013. We hope you've enjoyed our quick recap of the year, and all of us over at SFS Wealth Management hope that 2014 is a banner year for you. If you have any questions about what you heard in this update, or would like to discuss your own personal financial situation, please give us a call at 765-453-3355. We'd be happy to talk with you. And also, for that required disclosure, while we do believe that the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult with your financial professional before making any financial investment decisions. Thank you.